Hi, this is Craig Weeks. I'm the Senior Vice President of Trade for BAFT. I was asked to talk about a call to action for this week when we have so many conferences going on. And in my mind, the call to action that I would have would be on digitization of trade. There's been a lot of progress, but we're at several inflection points that need to be addressed quickly. And I think that if the industry gets together, not just the banks, but with our clients, with our fintechs, and not just strategy, but let's get down to tactics and make this happen now.
Hi, everybody. Alexander Malaket here, President of OPUS Advisory Services International. Just a quick call to action from me in Singapore as we have multiple industry association and industry events taking place this week. I just want to bring to people's attention, everybody's attention, the continuing importance of ESG and sustainability. I know we have had a recalibration of the topic, but I want to make sure we don't lose sight of some of the existential crises that are associated to this area of thought and activity, and that we don't deprioritize it too much. I think it's fine for the pendulum to find its equilibrium point, but I think it would be tragic for us to lose sight of the very human implications and impact that it would have for us to drop the ball on ESG and sustainability. So my call to action to everyone is keep it on your radar and keep it among the priorities that you pay proper attention to as you think of a way forward. Thanks very much.
Welcome to Treasury Payments, the podcast unlocking the future of cross-border finance.
From transaction banking and money movements
to liquidity, treasury, and cash management.
We bring you expert insights and the latest trends shaping global finance.
Hello, everyone. My name is Alexander Malaket. I'm the President of OPUS Advisory Services International and the founding partner of PRISM Global Partners, as well as a member of the TPP Global Advisory Board, thanks to Deepesh and the team. And delighted to be back in fantastic Singapore, where I have the pleasure of having a chat now with a good and trusted friend and colleague, Craig Weeks. Craig, great to see you.
Yeah, good to see you. I love being here. It's really exciting. So how much it's growing.
Fabulous time of year to be here as well.
Yep.
So we were asked to explore a couple of themes that would be of interest. There are a number of industry events and conferences taking place here this week, including the ADB events, the GTR, the BAFT event, the ITFA event is here this week as well, and I know you're involved probably across all of them. We thought about having this fireside chat format in terms of thinking about topics that will be particularly relevant this year, that maybe are brand new to the radar that we'll all keep an eye on in our industry, and a couple of topics that maybe would have dropped off in terms of priority and relevance. And I know this was your idea, so thank you for shaping the conversation for us today. Do you want to take us through, I think we called it the 2 up and 2 down kind of themes. Do you want to take us through your initial thoughts?
Yeah, so I was thinking that on the 2 up, the 2 that jumped to my mind, and coming at this from the trade finance lens of my 3.5 decades of being a trade banker, but certainly tariffs, I think, would be number 1. And number 2 will be digitization and all the flow down topics that come from that. But as we were mentioning earlier, if you were to have had this conversation last year, tariffs would not have been on the agenda. It was just such a non-entity. Nobody thought about it. And now it's all consuming and becoming more so. It will be the number 1 topic that we'll hear this week. Secondly, digitization and the other flow down topics that come from it, I think are front of mind for everybody. It's starting to get traction now, which is great, but there are a number of inflection points that have to be managed carefully right now, and I think there'll be a lot of focus on that. Issues that will be less focused and not dropped off, but certainly not to the degree that they were talked about a year ago, would be sustainability. And not that it's not important, but it's just probably not going to be as much front of mind as it was.
So I think I aligned pretty well with you on those elements. On the last one, I would have almost said blockchain, because that was all over the place a year or 2 ago. And
yeah,
I think now the realization is actually blockchain is an architecture. It still has its place, it has its relevance, but it's no longer about the sexy technology that is all consuming in terms of new developments in JVs and all those kinds of things. So I think it's found a more less sensational perspective.
Would you put tokenization under the blockchain or stable coins as being part part of that?
So I'm not a techie, but the way I understand it, the blockchain is the underlying enabling architecture and technology, and then the tokenization and the stable coins are what you build on top of and using the blockchain tech. So for me, they're two separate topics. And I think tokenization and stable coins and having the central bank digital currencies, I think that's still very relevant. I think there are more urgent issues that we're tracking now than those ones from a trade finance perspective. So let's see how it plays out. But certainly on the sustainability and ESG front, I would agree with you that it remains relevant and important. My take on it is that it's the pendulum kind of finding its equilibrium point, where you could argue we ignored some of the sustainability and ESG issues for too long. The pendulum swung one way, and it's now swinging back a little bit, and it's going to come back around to that equilibrium point. So that's how I see that piece. I think it's still very relevant. We face existential crises around these issues, and we need to continue to drive urgency. The Basel piece, again, you and I align on it. It continues to be relevant, and there's a lot of discussion in terms of the way, let's say, the European jurisdictions versus the U.S. jurisdiction handles all that, and I'll defer to you on elaborating on that point if you want to pick up on it.
I don't think it's gone away at all, but what I'm sensing, especially perhaps among the European banks and the American banks, that this is an opportunity to rationalize what may be over regulation in this area. And that the American banks, given the posture of this particular administration, we've been thinking that any day now there's going to be a flurry of activity around Basel and on loosening capital requirements and making American banks more competitive. We were waiting for heads of departments to be named in the new administration. Those are in place now, and we're anticipating that there's going to be a flurry of activity. And not that it's gone away, but it's not happening right now. There was a sense that maybe the UK and US could align on that, but I'm not sure necessarily that what's maybe driving the US government and what's driving the UK government may not be the same. We'll have to see with that, but I do believe that there will be activity on Basel. It's just the quiet before the storm, if you will.
The one thing I'd pick up on Basel and the whole business of risk-aligned regulatory treatment of trade finance is the whole trade register initiative, right? It's a 10-year plus effort, initially funded by the ADB and then housed at the International Chamber of Commerce, where we've been collecting data from leading banks on default and loss rate experiences. It's been very useful from an advocacy perspective, but it's absolutely crystal clear that there's an opportunity to evolve the register, to expand the scope, to look at other areas beyond credit quality, to look at more contributions from other banks, including those in emerging markets as well. And so I think there should be an industry drive to evolve that as a tool of analysis and advocacy, which it's had its successes, but there's a tremendous opportunity to build it out, in my view, and to actually make the data more easily available to regulators, to industry leaders, to people who want to do research, World Trade Organization, academic institutions, and a number of others who've shown interest in this as an opportunity. So I think there's something we could and should be doing there. The last piece, and this is interesting because we have a Canadian and an American admittedly married to a Canadian. So, Europe probably have one foot in each camp. But for the two of us to be talking tariffs is really interesting. I'll invite you to please start us off so that you can keep us in the sane space and you'll rein me in a little bit. But I think it's a critical topic to pick up on.
It's been a very interesting 6 months. And I think that we, as an advocacy organization, realize that probably our advocacy to the U.S. government is not going to be effective. So what we thought would be more effective would be to open up a bi-weekly discussion group where people from around the world could say, this is what's happening, this is how we're reacting to it, and this is what we've seen over the last 2 weeks, this is what we're anticipating coming over these 2 weeks. That's how narrow the time frame is on this. We're not talking about what's going to be our strategy in 2 years. We're talking about the tactics to get us through the next month. And that's not what we're used to. I mean, we're used to making strategic plans and executing against them. So that's been a challenge. When we're talking generalities about tariffs and whether they are a tax or not, whatever it is, getting down to the reality of how it impacts the banks. And that's what our members are concerned about. If you're a bank, what do you have to do? What do you need to do? How do you react? What do you tell your staff to do, your doc checkers and your compliance people, when it comes to tariff evasion, tariff avoidance, tariff-related crimes? If you're a supply chain finance company, how big is that opening to say, okay, fine, we're going to separate the value of the invoice from the value of the tariffs, and we can actually have two different funding streams for those, which is an interesting opportunity. So it's not devoid of things to do, but it's having to manage uncertainty that we all say we hate to do, that we're actually having to do. And I think that's the biggest issue now for not just for banks, but it's everybody in that supply chain. It's managing that uncertainty.
Yeah. And I think the other challenge too is, and I'm in a place where I can be a bit less sensitive to institutional, let's say, sensitivities. So I can call out the fact that the target moves almost on a daily basis. I'm exaggerating the statement, but it makes the point. It's like
changing tires on a moving car.
Exactly right. And it's really tough to do. And it's not about pointing fingers. There are tariffs, there are counter tariffs. People are dealing with this thing in however way they think is the right way to do it, both geopolitically and commercially. But the reality is it's a moving target, and it's really, really tough to deal with. And the issue that you've brought out, and I think BAFT has an ongoing discussion on this, the tariff issue about having the banks become quasi-police entities around enforcing the collection of tariffs. And it's a little bit like we went through in the financial crime space on anti-money laundering. It's a little bit about what's the proper parameter for the bank's role and how much expertise can you expect there to be in a banking institution to be able to understand the tariff, understand what the amount ought to be to begin with, and understand whether it's being collected appropriately or not. I mean, it's a huge ask.
Is it fair to ask a letter of credit technician to understand that an importer might have taken the tariff cost and stuffed it into the freight or fuel cost of a transaction and make that distinction? Is that fair to do? I would say not. If you're going to have this kind of tariff regime, whether it's the United States or wherever, ensure that the banks have the training and the guidance from the regulator to say, this is what's expected of you.
Hey, enjoying this podcast? Hit that follow button for more. Done? Let's get back to it.
Then there's the conversation about how a tariff actually works, right? Is it actually a collection mechanism for government, or does it end up being a cost that's passed down to the ultimate consumer? And how long does that pass down take?
Or all of the above.
Or all the above. I'm empathizing with the regulator a bit in terms of what guidance can they possibly give, because they're also dealing with a moving target. Could we spend 2-3 minutes on the financing implications of the tariffs? And I'm thinking of two specific things. One is this thing that we've noticed where when there was some discussion that the tariffs were going to start to become a serious issue, companies reacted quite naturally by holding inventory. And holding inventory longer and holding more of it, which impacts the entire working capital cycle. So that's one piece. The second piece is what happens to the time frames that people are financing because of all of this stuff that we're trying to figure out. So there are some very clear financing and risk implications to the tariffs dynamic, right? If you put aside the geopolitics of it. Do you want to talk us through that a little bit?
I think, unfortunately, the entities that end up getting hurt by this are the SMEs and the smaller banks, because, as you say, when you have the tariff, you're either going to have higher value transactions, which need to be financed for longer periods of time. That's compacting available credit, okay, making that credit more expensive. The banks are exposed for that much more time. That makes them put those transactions into a different risk evaluation formula. That also impacts the availability of credit. So I think that this has a very negative effect on the part of the economy that's least able to handle it. And that's the smaller importers and exporters. And cases of people having vessels afloat with a container full of lawn furniture that all of a sudden they've got to pay another 30% just to land the goods. They don't have that kind of flexibility in their pricing mechanism with their clients. So they abandon it. Or worst case scenario, they're telling their bankers to find discrepancies so they don't have to pay. There's a whole lot of bad stuff that can come downstream from this. I think that the negative implications of the tariffs on, first of all, the uncertainty, but also the trickle down specifically to the SMEs is very destructive.
Interestingly, and I don't want to name the car maker, but one of the big U.S. car makers came out publicly saying, listen, we've been able to absorb the impact of the tariffs for a certain period of time, but we can't continue to do that. So even the larger players on the buying side are facing choices about whether they pass down the price of the tariff to their buyers and if they then attract the ire of the political leadership, right, in whatever jurisdiction we happen to be
They were
talking.
willing to do that for a while.
Yeah, there's only limited appetite. to
But
be
I
able to
mean,
do that,
last
right?
week, 3 big U.S. consumer goods companies said, enough, we're passing these costs on to you now, so you're going to start seeing them in the stores.
Yeah.
So, yeah, that's a reality.
Yeah, and then the other piece is we can talk ad nauseum about the reconfiguration of supply chains as a result of this. Now, there are people who are making strategic decisions about sourcing patterns and behaviors based on tariff avoidance if they possibly can, right?
Yep.
So as if there wasn't enough pressure on supply chains and the structure of supply chains, we now have another element that's pushing what you might reference as an artificial restructuring of supply chains, because it's an externality. It's pushing that restructuring that otherwise that pressure wouldn't exist if it weren't for that, the political motivations of the tariffs, right? So even that restructuring of supply chains is a huge issue coming off that.
It's a pragmatic repositioning, if you want, or tariff avoidance. But yeah, you're going to look at different sources. The whole import substitution thing, it's not a bad thing. But if it's not managed well, then you end up hurting those importers that require those imports in order to build their exports. We had a very specific case of that. We had a speaker at our biweekly panel talk about that. He's an export facilitator, but a lot of his clients import. And if you think it's only the importers that are getting hurt, wrong. Yeah. It's those guys as well. So it has a negative impact on the exporters, and that was supposed to be the group that was going to benefit highly from this. So jury's out.
There's a lot of technical misunderstanding about how these things function and the impact they have. As you said, the exporters often import to build components for their final products, which they then turn around and sell. So that re-export piece is important. It's amazing that we're having this conversation about something that wasn't even on the radar a year ago, and it's been so disruptive, to put it politely, right? And just having that understanding of how these things work. Trade deficits in and of themselves are not bad things. All it means is that a jurisdiction or the businesses in that jurisdiction are choosing to buy more from a trading partner than they sell to that trading partner. There's nothing inherently wrong in that. Same as there is nothing inherently better in an export-driven economy versus an import-driven one where the imports raise standards of living, they raise quality of life, all kinds of things. So there's positive things that happen from imports as there are from exports. So it's interesting how the perception and the perspective on those issues shape this whole conversation.
Yeah, I agree with you. Somehow imports are all bad. Yeah. Okay. You should be focused on things you do well, but at the same time, you need to focus on your country's security and its economic well-being. And if that's something that we don't necessarily need to have 10 factories producing some basic good that somebody else can do better and cheaper somewhere else. But if it's required for strategic purposes, then we have to plan that and not just say, okay, fine, we're not doing it anymore. That's been the issue, is that we're expecting a lot of import substitution immediately. And I don't think that the country's geared for that.
I'll wear my Canadian hat for a moment, if I can be permitted to do that, and just call out the fact that before you point to a national security risk, whoever happens to be doing that kind of thing, really have a think about whether it really is a national security risk. It's just, there are certain mechanisms that are being used.
Whether you're doing that under the security umbrella for political purposes. Yeah,
I mean, trade itself, let's back away from the tariff conversation. Healthy trade itself has long been argued as a source of global security because, as somebody once said, countries that trade together are less likely to shoot at each other, right? So there's still that national security or that global security element to a healthy trading regime, which kind of gets lost a little bit in this discussion. But anyway, I think we've done well on the 2 ups and 2 downs, right? Is there anything else you want to highlight as we wrap up?
I think that organizations like BAFT, when there are times like these, this is where we can really be helpful. We are a global organization. We give a global perspective. We want a level playing field for all of our members. And this is where we have that global view. We're getting input from all of our members all over. And so we're able to march to that. And I think we have a very positive impact on this whole conversation. So I appreciate our friends for having us and having this opportunity to give you my views.
Craig, thank you. Good to see you again. Gentlemen, thank you very much for the opportunity. Great to be here.
And don't forget to follow Treasury Payments
on your favorite podcast platform.
Thanks for listening.